Welcome to my YouTube channel. In this video, we will talk about the top 10 dividend stocks to buy for 2023. 1. Energy. Note that the first two stocks on the list share the same underlying business. Brookfield Renewable Partners is a limited partnership LP. The company created a separate stock, organized as a corporation, Brookfield Renewable Corporation, to enable investors to avoid some of the tax hassles associated with LPs. Also, the two stocks with the highest dividend yields, Pioneer Natural Resources and Devon Energy, pay a fixed plus variable dividend. The variable portion depends on the company's excess free cash flow. Although there's no guarantee that Pioneer and Devon will be able to generate as much free cash flow in 2023 as they did last year, their chances appear to be pretty good. 2. Healthcare. Big pharma companies often pay solid dividends. These three definitely qualify, and they each handily beat the market in 2022. AbbVie and Johnson & Johnson could be especially appealing to income investors because they're both dividend kings with at least 50 consecutive years of dividend increases. The new year will be one of the big changes for the two companies. AbbVie faces declining sales for its top-selling drug Humira due to biosimilar competition in the U.S. J&J plans to spin off its consumer health unit in 2023. However, both stocks should continue to be winners for investors over the long term. 3. Real estate. Real estate investment trusts, REITs, are known for their high dividend yields. Below are some of the best REITs on the market. All of these REIT stocks fell in 2022, with some declining sharply. However, if the Federal Reserve stabilizes interest rates later this year, the stocks could enjoy nice rebounds. 4. Other. The final members of our list of dividend stocks to buy and hold in 2023 span multiple sectors. All of them offer great dividends and solid long-term growth prospects. Note that Brookfield Infrastructure Corporation and Brookfield Infrastructure Partners share the same underlying business, in a similar way that we saw earlier with the two Brookfield renewable stocks. Investing in Brookfield Infrastructure Corporation doesn't have the tax complications of Brookfield Infrastructure Partners, which is a limited partnership. Ares Capital ranks among the smallest on the list of 23 dividend stocks, with a market cap of under $10 billion. However, it also pays one of the highest dividend yields. The company believes it will be able to continue paying out its high dividend under multiple scenarios for the economy in 2023. 5. Technology/telecommunications. Most tech stocks don't pay dividends. The ones that do tend to offer relatively low dividend yields. Telecom stocks, on the other hand, often have attractive yields. The following stocks illustrate both points. You probably won't buy Apple or Microsoft for their dividends. However, these two beaten-down tech stocks could roar back in 2023. 6. Should you invest $1,000 in Ares Capital right now? Before you consider Ares Capital, you'll want to hear this. The Motley Fool Stock Advisor analyst team just revealed what they believe are the 10 best stocks for investors to buy right now, and Ares Capital wasn't one of them. Stock Advisor is an online investing service that has beaten the stock market by 3x since 2002 asterisk. And right now, they think there are 10 stocks that are better buys. 7. M&G. We used consensus analyst forecasts when putting together this top dividend stocks UK guide, and M&G came out on top. M&G initially stood for Municipal and General Securities Company a lot. It launched the first ever UK unit trust in 1931, and it remains an international leader in savings and investments to this day, with more than 5 million customers. M&G is a fairly new addition to the FTSE 100. It registered on the London Stock Exchange in 2019, following a demerger from its parent company, Prudential. It began paying dividends in 2020 and quickly soared to the very top of the high-yielding list. Analysts anticipate a 10% dividend yield this year, with 209x dividend cover and a payout ratio of 48%. The firm allows private investors to buy into funds through ISAs, savings plans, OEICs, or unit trusts. It also provides financial services for professional investors, institutional investors, and charities, and offers many other services. In 2020, it tied up a deal to acquire digital wealth management platform Ascentric from Royal London, which was expected to transfer £14 billion in assets under management. 8. Imperial Brands. This British multinational tobacco and logistics company came in at number 2 in the consensus analysts' forecasts, with a dividend yield of 9.3%. Dividend cover is expected to be 1.85x, and there is a 54% payout ratio. Imperial Brands, formerly known as Imperial Tobacco, owns brands including Davidoff West, Gauloises Blondes, Montecristo Golden Virginia, Drum, and Rizla. The firm has 27,500 employees and operates across 120 markets, with revenue of £32.6 billion in 2020. That makes it the world's fourth largest tobacco company, behind Philip Morris International, British American Tobacco, and Japan Tobacco. The firm produces more than 320 billion cigarettes per year, but is slowly transitioning towards vapor products, such as its Blue brand, plus heated tobacco and/or nicotine products. 9. Polymetal. This Anglo-Russian precious metals mining company is registered in Stahelier, Jersey, and trades on the London Stock Exchange. It owns a high-quality portfolio of gold, silver, and copper mines, which makes it an interesting investment opportunity right now. Copper prices have soared in recent months as electricity generation, transmission infrastructure, energy storage, and consumption all require copper. It will play a vital role in the push toward green energy, but inventories are low, so the narrative is bullish. 10. British American Tobacco. BAT is another tobacco giant with brands including Dunhill, Kent, Lucky Strike, Pall Mall, and Rothmans. It is the second largest tobacco company in the world, but it is close in size to market leader Philip Morris. The firm reported revenue of £25.8 billion for 2020, with a net income of £6.6 billion. It has operations in around 180 countries and employs 55,000 people. It was formed all the way back in 1902. Jack Bowles is the chief executive, having taken over from Nicandro Durante in March 2011. Make sure to watch the full video. Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.